If you've ever entered a trade and you've set your target, you've set your stop loss, and immediately the trade goes straight down, hits your stop loss, and then goes straight up into your take profit. I know that can be the most frustrating thing ever, just like this example here. You know, you have your trade, boom, hits straight into your stop loss, and then next thing you know, goes straight up into your take profit. If you've ever had this happen to you, this video is for you. Okay, so I know you've had that happen to you. It's happened to everyone who has ever traded Forex before. Now, if you find this is happening to you a lot, this video can be very helpful for you because we are going to cover the best entry technique that I have. And this is something I've developed over time, and it's gotten better and better and better. And now I have certain tricks and tips that will help you get those better entries so something like this does not happen to you. Okay, so looking at this chart right now, let's say you are looking to take a buy on this support line here. I'm not going to talk about any specific strategy for this. I'm purely just going to be talking about entries because a lot of entries are very similar. And I want to talk about a very specific type of entry that I'm going to get around to that is very helpful for this. So let's say this is your entry here. And let's say you want to enter at that green line. Most people will set their target right there. And they'll be like, this is where I'm going to enter. My take profit, let's say, is up here. And my stop loss will be, you know, below these wicks right here, just to cover for that extra space. Now, something people do not take into account, as you can see, it just goes straight into my stop loss. People do not take in account that the market is always changing. The market is always creating new dynamics. And if you are entering a trade statically, you're trading a dynamic market and you're entering a trade statically. So what happens is you have this market that's constantly, you know, changing, constantly moving, constantly creating new forms. And you're entering based off of something that, you know, you could have, you know, analyzed an hour, 2, 3, 4 hours ago and analyzed an entry for a trade that has now kind of totally changed since. So because we're in this dynamically moving market, I think the more appropriate way to enter trades, and what has worked for me personally, is to enter trades dynamically. If you're looking for a great broker to use, I highly recommend signing up with HangoTrade. They have great spreads, great leverage. I personally use them. I personally love trading with them. I use their account every single day. If you want to sign up for HangoTrade, link will be down in the description below. Okay, so today we're going to be talking about different ways to dynamically enter your trades. Why dynamic entries are better than static entries. And this is all dependent up to you. I personally find the way I trade, static entries aren't as efficient as dynamic entries, especially because, like I said, the markets are always moving, always dynamically changing. So your entries might have to dynamically change and adjust to the market as well. When you're statically entering, that's usually when you just place your trade and that's exactly where it's locked in. But something we should have counted into, you know, effect before we took this trade was that we saw, you know, all these very bearish candles leading right into our entry here. Now, because we have all these bearish candles here, it doesn't really look like we're losing much momentum. It looks like we're actually becoming a very strong move to the downside. You know, because we left our entry there, we kind of got screwed over because we never waited for momentum to kind of reverse. And as you can see here on the 4-hour too, looking at the MACD, for those wondering, here are the MACD settings here. You can pause the video and check those out if you want. They're just the default settings. As you can see, each candle is actually getting stronger on the MACD as we entered. If we drop to the 1 hour, you can see the same thing. As we are entering, the candles are actually increasing in momentum. So this is a not good place to enter. Now, if you're looking for a good place to enter, you want to enter when price starts to lose momentum. So, you know, pretend this is a wave. You see the wave is getting bigger. You don't want to enter as it's getting bigger. You want to enter as it's getting smaller. So as you can see now, the wave is starting to reverse. We have these candles going back down. So this is a more optimal way to enter. So this is actually going to be the first tip I have to enter is watch the MACD, watch how it reacts on the 1 hour, on the 4 hour, whatever time frame you want to look at. Let's say we were entering on the 1 hour. We're going to look to the 1 hour and wait for that momentum to kind of switch. So a rule of thumb that I personally use is that you want to see at least 3 candles lower than the previous candle. And what I mean by that is here on the MACD, I would enter now because we have 1, 2, 3 candles. So if I actually mark this out, we got 1, we got 2, and we have 3 candles. And if I connect this with a little arrow here, we have all these candles lower than the last. We have 3 in a row, and usually I wait for 3 candles in a row to actually look for an entry, and they have to actually be a significant amount lower. For example, up here wouldn't be as big as an example because you have 1, 2, 3, but they're very close together. You want to see an actual progression of it losing momentum back into the upside again. So my entry would actually be here, and then if you go to the 4 hour, as you can see, we're not entering, as price is falling down with a lot of momentum. So you would watch, the next kind of candles on the 4 hour here, and this would be able to actually teach you. Because now you see on the 4 hour, we have 1 candle lower, and then it would get reset again. So then we need to wait for another 1 candle lower, 2 candle lower, 3 candle lower. And by the time we have that 3rd candle lower, we're actually starting to move into. So this would also give us that extra reassurance, like, okay, we flipped momentum. Now we can actually hang on to this trade and hold on to this trade and let it go higher. So that was my first tip. Pay attention to MACD momentum, see how that works, see how that runs. You can test it out for yourself. Go back, test some of your entries. Go look at some entries that may have worked out if you just waited a little bit longer, and see how that dynamic works for you. The next topic that I'm going to be talking about too is actually going to be checking out the lower time frames. So I know we were just looking at this trade on the higher time frames. Why don't I actually go and switch over to another example just to switch it up. Okay, so this is a trade I actually just took last week. Actually, no, this was maybe 2 weeks ago, but I'm going to show this as an example because this is one of the times that I actually used a lower time frame entry. So this is a trade I took a couple weeks ago. I think I just covered this in my last video, but I just want to quickly go over it really quick again. This is a time where I didn't get in where I wanted. I wanted to get in right here on this order block. If I put an arrow right here, that would have been my entry. But I didn't get around to entering in there. So what I did was I went to the lower time frame, which would have been the 15-minute, and I actually waited for price to kind of break over this lower high here. It broke above this lower high, came back, and then I touched in for an entry. I just wanted to quickly cover that again for maybe those who didn't see that. If you miss your entry, if you want to wait for an entry, you can always enter later on a higher time frame. I'll use another example here. Let's say you wanted to enter here, but you weren't really sure yet. Let's say you wanted to enter right here at this resistance, but let's say you weren't really sure about entering exactly at the resistance because you saw maybe this big bullish candle and you're like, whoa, I don't really want to enter yet. This is an example of when you can drop to the 15-minute and maybe you could say, I'll wait to enter when price breaks this low instead. So this is when you can factor in multiple time frames. Okay, now we have this bearish candle breaking through here. So maybe I'll enter here instead of entering up there, right? So this is another form of dynamically entering because you're not just picking one position. You're picking an area where you want to enter and you're dropping into the, smaller time frame of that, and now you have a if and so entry instead of like a, static entry. Now you have a if this happens, so if this happens, then I'll enter. I never said I would enter specifically at this place, but if this happens, then I will enter, right? And the if for this specific example is if it breaks that area. So it broke that area, and then as you can see, kept continuing after that. I will do a random trade with you here. I'm just gonna go back and replay randomly back here, and I will show you another example. Okay, so here is a trade I will take here. This is a trade I would take. This is actually pretty textbook here. So we have a downtrend, we have a break of a lower high, price is pulled above that. So now we'd want to wait for price to pull back. This might be a bad example, but let's say we wanted price to pull back here, never pulled back. So we'd want to jump to a lower time frame to get a more optimal entry. Let's say we wanted to wait for price to break that. Price broke it, so our entry would have been here. But it's a little too late to look into that. But you get the point. The point is that we want to enter more where you're not just setting a specific entry, you're actually waiting for certain things to line up first instead of entering at a specific area. Okay, so actually yesterday in my premium group, I was talking about how I was looking for a trade up here, up in this zone here, and let me actually just replay to that position. I was looking for a trade up here, but price was steadily just kind of rising up here, and as you can see, we weren't really losing momentum. We were kind of going higher and higher and higher. So I told myself, okay, you know, I'll wait, I'll drop to the lower time frames, and I'll wait for another entry. So I dropped to the 4-minute time frame, actually, sorry, 4-minute time frame, and I was waiting for a entry on here instead, just because, like I said, you could have had a static entry back up here and said, okay, I'll enter up here, and then you would have got stopped out. But I saw how bullish things were, and like I said, in the market, things are always changing, so you kind of have to adapt to it as well. So I saw it was changing, so I said, I'm going to change as well. I'm going to wait for some sort of thing to happen. So price broke below this higher low here, and it was still pulled back to a spot that I really liked. And we are still in this kind of downtrend, right? We never broke above a lower high yet, so we're still in this downtrend. So I said I would enter the trade here. So I took a nice little sell right there. For this, I only ended up taking a 1-to-1. I actually had my stop loss above that. For this, I only ended up taking a 1-to-1, which is all right. Profit is profit. Almost ended up hitting my stop loss there, but I ended up taking profit either way, so that was good. And then price ended up just running straight down. I could have held it for longer, but I wasn't looking to take too much risk here. But the point is, profit was made because I chose to patiently wait and actually dynamically enter and wait instead of trying to rush into things and enter just in a static spot, because I saw how the dynamic was changing. I also saw on the 1 hour, if you pay attention here on the 1 hour, what I like to pay attention to is the MACD was losing momentum on this bearish side, but yet we were looking to take a sell, so it didn't really make sense. So as you can see, by the time we entered, which was around here, we started to lose momentum on the 1 hour, and then we got in and the price just went straight down. So it is important to practice these dynamic entries. So your homework would be to just kind of do some back testing, look at these dynamic ways of entering, pay attention to momentum, pay attention to changing to a lower time frame, and actually seeing how you can enter according to your own set of rules on the lower time frame, whatever you want to do. I like to use highs and lows to enter, but that part is totally up to you. But dropping to the lower time frame can get you a better entry if you wait for another setup on that lower time frame. So other than that, hopefully you enjoyed the video. I think that's going to be it for this video. Coming up soon, we will do some actual exit strategies too. So this was up for more of entries. We're going to talk about dynamically exiting your trades as well. But yeah, that's going to be it. And thanks for watching. Hopefully you enjoyed the video. If you haven't yet, go sign up for my premium Discord. I do live streams in there. I have my entire course in there. You only pay $60 a month. And I live stream Mondays and Wednesdays. We do scalping. We do setups for the week. And some good stuff in there. So thanks for watching.